What's up, everybody? So we're just going to do a live stream, see how the market did today. What's a good website to see how the market... I always go to Yahoo Finance, but let me know, is there a site you like to look at to see like the news and anything, any big changes, any earnings, any... I have on my phone, I did skip some days, but Master is up 6%. I bought Master. I shorted Master, MSTR, when Bitcoin was 102,000, and now Bitcoin's down to like 85,000. But it's an options play, so there's a time component to it. So if you short using options, a stock can go down and you still will not make money. And if you buy options, like you long options, a stock can go up and you might not make money because there's time decay, as you probably know. But what is Bitcoin trading at? Is it still around 80, 85? Let's see. Let me know in the comments if anybody has any questions or ideas, things to look up. It's 85, yeah. I knew when it hit 100, there was going to be a pullback. Maybe options wasn't the best choice. What was the peak? 105,000 was the peak. 109,000 was the peak. Let's see what Yahoo Finance says. I also like to look at each day. Hey, Mike, what's up? What stocks went up the most? What stocks went down the most? I haven't done that in a while. I can't even find... Oh, here it is. I mean, it's kind of irrelevant because the stocks that go up the most or down the most tend to be really small cap because it's on a percentage basis. Like Newsmax went up 179%. Who would actually own Newsmax? Although it's pretty expensive, $233 a share. So maybe it's not so small after all. 21 billion market cap, so it's not a small company. So that's kind of surprising, 179%. And sometimes when a stock goes up a lot, like 1,000%, it's because of like a split, a reverse stock split. And people don't realize. So why did Newsmax go up? And I was just reading, what does Newsmax do exactly? Newsmax. Okay. A cable news, political opinion commentary, and digital media company. So it's digital media. Okay. I was thinking newspapers for a moment because I was just reading an article about how newspapers are going obsolete. Conservative media outlet. Newsmax launched a cable TV channel in 2014, 35 million satellite subscribers. This model. If you have enough subscribers, you can fund growth. That's what you need because it's consistent revenue. That's really the name of the game. This was a demonstration that there are more conservative investors than probably the market anticipated. Newsmax surges after IPO. Also, it was the IPO. Okay, so that makes sense. So it was the first, or the first week. A $20 billion market cap company to go up 179% in one day is kind of surprising, but it's an IPO, so that kind of makes sense. Its IPO was 10, so was it a SPAC? SPAC. So all SPACs start at 10. I don't think it's a SPAC. So it looks like it IPO'd yesterday. So you could have bought it yesterday for 100. It says 100, not 10. I don't know why it says. Did they do a reverse stock split so fast? They must have done a stock split, because who IPOs at $100? Most companies IPO at like $15. Not 100. See, it says it surges 1,160% because they're basing it off of $10. There's no way. Oh, it did start at $10. So it did go up. It went from 10 to 280. Now it's down to 188. How could that happen? There's that much interest in this company that it could go from loyal Newsmax viewers who listen to the channels, $10 per share stakes in the company. I'm feeling pretty good. Those shares are now worth 200. Well, after it's down 18% after hours. It's down to 190, but still. It was a pretty. Because you can see it started trading at 10. I wonder if you could have even got, there's pretty much no way to buy it at 10. I guess you could have bought it at like 50. Yesterday, you could have bought it at 50. But who would buy a stock that went from 10 to 50 the same day? I mean, if you're a good investor, you would have done it because it went from 50 to almost 300. Once it hit 50, it kind of flatlined for a few hours. Okay, it came up a little bit. Then at the tail end of the day is when it surged a lot. Tail end of yesterday. So it opened at 100. So I mean a 10x from its first day trading. Open at 100. Is it a good time to buy it? I mean, it could go to 1,000. It's just so hard to. We further intend to effectuate a forward stock split. The forward stock split. Let's see what they say about the stock split. I don't know. Newsmax raised $75 million for the sale of 7.5 million B shares at $10. So if you work at Newsmax, especially if you're one of the senior people, you made like $100 million overnight. Or even if you're not too senior, you could have made a few $1 million overnight. But you can't sell your stock. Usually there's a lockup period. So when a company IPOs, there's a lot of, like in this case, a buying activity. So if you own like 10,000 shares, you'd want to sell it now, but you can't. You have to wait like a certain amount of time after the IPO to release your shares. And chances are it'll come down the stock. Shares surged 735% on Monday and pushed the TV news market cap to 11 billion. And then it doubled. Now it's 21 billion. But who knows? There's so many IPOs. Who knew this would be the one to blow up? I mean, it's not even that good of a company. I mean, a news channel. I mean, it's probably not profitable either. Let's see the financials. Okay, let's see if Newsmax investor relations. There has to be some financial information. You ready for liberation tomorrow? It's the big day. Newsmax, 225 million. They have to provide their financials somewhere. When a company goes public, okay, let's see the SEC filings. They have a 10K already? Oh, look at this. They have a 10K. I wouldn't have thought they would have a 10K. Maybe they don't have anything in it. Yeah. In their prospectus, they have to provide financials somewhere. I don't understand this. Am I looking at the right company? Newsmax Inc. Financial statements. Yeah, they don't really have. It's like a pump and dump kind of thing. It could be a good stock to short, maybe. Okay, here. How come I searched current assets and nothing came up? So let's see their income statement. This is 2024, 171 million of revenue. It's mostly service revenue. Their subscription plan, 165 million. Gross profit, 84 million. So it's about 53% gross margin. But of course, they have a loss, operating loss, because their operating expenses are higher than their gross profit. Operating expenses 150 million, so they have an operating loss of 69 million. So a net loss. Of revenue, maybe they can be profitable. Who else? So iCore Connect, 111%. That's a lot smaller, 472 a share. Marblegate Acquisition Corp. That sounds like a SPAC. Nutex Health. Usually, when you look at the companies that went up the most or down the most, you probably won't recognize many names. Hut 8. I definitely heard of Hut 8. That's a crypto company. CleanSpark is that also crypto? CleanSpark, yeah, it's a Bitcoin miner. I guess when Bitcoin goes up, these stocks go up. And they pretty much move with Bitcoin. Sunrun. Oh, Knot. I've done videos on Knot. That's a midstream company. These are top gainers, biggest losers. So a lot of pharmaceutical companies are in the top or bottom. Usually small companies, like 1 million market cap. And this is not even a million, 600,000 market cap. Yeah, they tend to move around a lot, especially when they get approval for like they pass through a stage of the of like the phase. There's usually phase 1, 2, 3 of clinical trials. So every time they pass a phase or they don't pass a phase, the stock goes up or down. That's pretty much how these stocks move around so much. So what's a good U.S. stock futures rise as Trump's tariffs set up global trade shakeup. So that's the big news, the tariffs. Anger against Trump is likely to cost the U.S. international visitors 20% tariffs. So tariffs, he's trying to force things to be American made, because when you tack on a tariff, an extra tax, then importing from another country is more expensive. It's still usually cheaper to import from another country than make in the U.S. because it's so expensive to make things in the U.S. Labor is really expensive, and then there's a lot of laws and things like that. Just building factories is expensive. I bought Bitcoin. I bought $100 of Bitcoin a few years ago because I was buying Bitcoin to buy some things, and it was cheaper using Bitcoin. I never got around to using the $100. So now it's let's see what it's at now. It's probably close to 300, or maybe less. So it's 288. I don't know if you can see that. Can you see that? Probably not. Yeah, it's 288. But yeah, I don't really invest in crypto. JXA, hello. Let me know if certain stocks we can do a DCF or look at them closer, or we'll just go through the news for the day. So what do you guys think of tariffs? Are you against it or for it? I mean, there's positives with tariffs. It's not all negative. I mean, when you do add a tax onto things, it does cost the end user. So if, for instance, there's certain things that Apple imports, maybe there's certain materials they import, or batteries, or something they import from other countries because it's cheaper. So if there's a tariff added, then they're gonna have to start charging more money for the product. So in some ways it's bad, other ways it's good, but it could it could motivate people to start making things in the US, which could add more jobs. I wonder if televisions will get more expensive. They might, I mean, also with tariffs, also and other policies Trump has, he's trying to encourage like, for example, Taiwan Semi, who's the largest manufacturer of semiconductor chips, and they're a Taiwanese company, so they manufacture chips in Taiwan, and then they ship it back to the US. So if NVIDIA needs chips manufactured, NVIDIA asks Taiwan Semi, make these chips and then ship it to me. But the goal is for Taiwan Semi, and Taiwan Semi is working on this, to build factories in the US. So instead of having to make it in Taiwan and then ship it back to the US, just make it in the US. And you could it's still within Taiwan Semi's company. It's just they have a factory in the US in addition to factories in Taiwan. So Taiwan Semi, which they are building because they were given a lot of money, U.S. factories. So it doesn't, like, if you work at a company that's from another country, like you could work at a Japanese bank or a Brazilian bank. You could work in the U.S., but you're employed in the U.S., which is good for the U.S., right? Because it gives you money, you pay taxes, which helps the economy, and you could support yourself. You can then use the money to buy things in your community, which helps the community. Taiwan Semi is building a plant. Yeah, Arizona, right? Okay, in the city of Phoenix, nearly 3,000 employees at Taiwan Semi support the manufacturing of the most advanced semiconductor technology. So giving money to a Taiwanese company is not like a bad thing. I mean, of course, you'd want them to give it to a U.S. company, but Taiwan Semi is ahead of the game, and they know how to manufacture semiconductor chips. So if we give them $50 billion and they create this factory that adds 3,000 jobs or more jobs, that has a great trickle-down effect for the U.S. economy. You're totally against tariffs? My supplier just informed me they are raising price by 15%. Hey, Scott, are you looking at any stock in the healthcare sector? Yeah, I mean, tariffs, it's going to affect somebody. It definitely has its drawbacks, but that's anything. Like when we pay taxes, it's less money we have that we can do things with. But supposedly the taxes are used to protect us, to pay to you to like pay for teachers or policemen or schools or to build roads, things like that. So it's hard to kind of look at things in a black box and just say, oh, because, you can't blame people, because like when things start costing me more money, like when I used to pay $2 for a dozen eggs, now I pay $5 for a dozen eggs. I see the difference. So, but that's life. That's inflation. I don't know how you can. You have to just you have to adapt. Unfortunately, there's nothing we can really do. Yeah, I don't know. Healthcare. I like the healthcare sector, but I'm not sure about a company right now. Tesla sales tumble again in key European regions. Newsmax rally pushes market cap 20 billion. How do you evaluate pharmaceutical companies under 10 billion market cap? Well, can you give me an example? Okay, thank you. CPRX. I mean, it's pretty easy to value a company. I mean, it's if you use a DCF, it's a simple approach. Let's see. Well, and when I do a DCF, it's only like 10% of my decision to buy a stock. But we'll do it anyway with this. Well, they do have positive cash flow, which $240 million. Okay, so the simple approach would be to do a DCF, discounted cash flow model. So you look at how much cash flow the company generates. If we just use the most current year, which is 240 million, and then I just grew it by 10% over the next 2 years, and then my terminal value is 2.5%. So I come out with a stock price of 32. So it does appear it's valued appropriately or even undervalued. I mean, 240 million was a good year for this company. If we use, say, their prior high, 116 million, then it's overvalued. But yeah, I would just look at the company, especially for a pharmaceutical company. You'd want to look at that pipeline. If you're good at understanding this type of sector, it's not that easy to look at the underlying drugs and deduce whether they're going to be successful or not. But like, for instance, the weight loss drug is a big deal, right? So if a company was working on a weight loss drug, that could be a pretty big winner. But generally, a company that's generating profits like this company is, and it looks like they've probably been around a decent amount of time, the DCF is probably the best approach. But if you're looking at a company that doesn't have any revenue, they're pre-revenue, and they're just developing drugs, then you'd have to use the approach of looking at their pipeline of drugs, seeing what stage they're in, whether in phase 1, phase 2, phase 3. And but a lot of times I would just read about the company to try to get a sense of, is it in a good industry? So we're doing Catalyst, right? Yeah, Catalyst. Okay, it develops medicines for rare diseases, including the phosphate salt. The drug is referred to under the trade name Firdapse. So rare diseases may not be as catchy as something common like cancer, where a lot of people would need a drug. But developing drugs for rare diseases isn't necessarily bad, because there's going to be demand, and you probably could charge more because there's less competition. But yeah, but I would look at what they're doing now, the history. What's the ticker? CPRX. You can see the insider trading activity too. It's up 57% in the past year. You can see what other analysts are looking. Simply Wall Street's at $91. Then you have 8 analysts price the stock at 34, which is actually really close to what I'm at. I'm at 32. So they're probably using a similar approach as me. You can see the revenue projection is pretty aggressive. So analysts project their revenue to grow from 500 million, that's 2024, to 555 million, up to 686 million. So they expect pretty significant growth. Looking for insider activity, if there's any. I guess there's no insider trading. Okay, here. So there's only sells. There's no buys. And insiders have been selling as low as 16 up to 23. So not the best sign. Vitris. $869, 10.4. They pay a big dividend, 5.5%. Let's see the financials. I don't know what happens. Okay, let's go to a different website. Yahoo Finance hasn't been working as well as it used to. So their free cash flow was as high as $3 billion. It's down to $2 billion. I wonder what the future growth is. pretty undervalued. It's pretty surprising. What's Simply Wall Street's at 50. The average analyst estimate is 12. I'm at 27. So maybe that's kind of, so they had $2 billion of free cash flow in 2024, and it was as high as $3 billion. So I'm taking the $2 billion. Huh. Yeah, looks pretty good, right? Vitros. Why is Vitros so undervalued? It must have come down a lot. I bet you it was a lot higher. So it was over 70 in 2015. And now it's trading under 10, which it was trading at this range. It was trading at $10 in the late 90s. Was it a lawsuit? Do you know why, Kevin? Why is it went from 70? It really fell off a cliff starting in 2015. It never really rebounded. From 2017, it was 33. Then it got up to 40, almost 50. But then it came crashing down. Pretty much ever since 2017, it's only come down. I guess it's been trading sideways the last 2 years. That's probably why they pay such a high dividend. It's a pretty good yield. So I guess if the stock price comes up, you could expect the yield to come down, unless they're probably going to cut their dividend. It looks like, because they can't. It's a 5.5% dividend yield. Oscar Health. It's a pretty new company, Oscar. Its peak was right when it IPO'd at 36. And you could have got it for under $3. 221 was the low. That was the end of 2022. Which would have been an amazing time to pick it up. Oscar. It's a REIT, right, Oscar? So 7 analysts have it at $19. Let's see. 3.3 billion. $13, 3.3 billion. Let's see what the past performance. This might be hard because it looks like it has, well, recently it had almost $1 billion of free cash flow. Let's see if there's any future projections. So, yeah, the future projections are up to 1.3 billion. Let's see if we just give them $500 million, even though they hit $1 billion recently. Let's give them $500 million. Let's raise the whack a little. So we're still at $30. So Oscar looks like a, but if it's, you think like if a stock is undervalued for so many years, why is it not going up in price? Oscar Health is a health insurance company founded in 2012. Okay, so it's focused on telemedicine, which is the big thing now, right? So people don't have to go to the doctors, they can do it all online. According to the company, it was founded in 2012. We were classmates at Harvard. Mother Jones. $16. That's a lot of members. Oscar missed earnings 2 straight quarters. And that could definitely happen. It looks interesting, Oscar. It looks let's see if there's any insider activity. So there's a lot of buying. It's by Thrive Capital Management. That's probably a hedge fund or a private equity firm. So Thrive owns 16% of the company. Who's Thrive? It's a VC firm. Thrive is an American venture capital firm based in New York. Oh, it was founded by the person who founded Oscar. So that's why he owns 16%. Let's see the earnings history. So they did miss revenue and earnings. Last quarter they missed earnings, but they did hit revenue. They crushed earnings the first 2 quarters of 2024. So they missed, so it could be a good time. There's probably a pretty big pullback. It's a pretty new stock. So it was trading in the low 20s in the third quarter of 24, and it's almost cut in half since that point. So it doesn't look like there's that much downside potential. There's much more upside than downside. I mean, you never really know when the bottom is, but if I was a gambling man, I would say there's more upside potential. It's more of a buy than a sell. But it was under $3 for a few months. So it would have been, imagine getting it for under $3. That would have been amazing. Michael Berry started investing in a couple. That'll help. They don't pay a dividend, right? They probably will, because most healthcare companies do pay a dividend. What else? So Oscar, Oscar looks really good. I'd consider investing in Oscar. What? I feel like there's always water on my computer. So what other? Okay, Oscar, Vitris. Oh, Doc Healthcare. That's the REIT. Doc Healthcare. I don't see that. I don't see a Doc Healthcare REIT unless it's under a different. Physicians Realty Trust, the ticker Doc. Yeah, these big investors, they buy a lot of companies. And the thing is, when you invest, when you're a private equity kind of person, you only need like maybe 2 or 3 out of 10 to do well. Even if half your investments, the companies go bankrupt, just if one like 20x's, that kind of picks up the slack for so many companies. So you don't have to be like right. It's not like it's kind of like in baseball. If you have a 300 batting average, you're doing pretty well. But even more so, like you can have 100 batting average. You could be 10% right and still be a billionaire. The ticker stock. Okay. So it is the company. Doc. I wonder why there's 2 tickers named Doc. That's so weird. Health Peak Properties. I wonder why they list 2 tickers on this website. Yeah, let's look at Uber. Uber's a good one. Cybercabs. $73, $152. $152 billion. Pretty good market cap. It's coming back. Yeah, I remember it started it did come down a lot. So the March 2020 bottom was equaled in 2022. It came down to low 20s once again. I know Victor did really well on this stock. If you guys follow Victor's channel. So it peaked recently, well, not like 5 months ago, 6 months ago, in October at 85. Simply Wall Street's at 173. 50 analysts at 889. Let's see the free cash flow. So 2024, it's almost 7 billion, and it's projected to go to 12 billion by 2027. Let's see if we. So if they hit these targets, I think it's a. It seems like it's valued at a good price. It's not that good of a deal anymore. When it was, below 50, it was definitely a good deal. It's getting up there. To the victor go the spoils. Exactly. That's a good one. But you gotta. This is a long-term trade, I think. If you're buying this, I think that's the way to go. This is not like a company it's not too risky. Although I probably wouldn't buy it, but lots of insiders selling. Only selling, no buying by insiders. I just don't see robo-taxis. I don't see it being that much of a problem. It's there's just so much demand for their services in every pretty much every city, especially the big cities. But even small towns, there's so many people that need to get places. Some people lose their license. Sometimes when people hit a certain age, like 70 years old or 75, 80, they just don't feel comfortable driving anymore. So you're gonna need their services. The margins I don't think are that great, but it's a good business model. It's definitely gonna always be around. Last half. CR ticker. Crane Company. Hmm. 155. Let's see the free cash flow. So they're at 236 million, and the forecast is 400 million. They probably pay a dividend, right? It's a really small dividend. 0.5%. Or 0.6%. It was a lot higher, 3.1%. The stock must have come up a lot the past 2-3 years for the dividend to go down so much. I bet you're like 5x or something. Yeah, it went from 50 to 180. So the COVID bottom was 50. And then it peaked at 180. So it more than tripled, almost quadrupled. By the way, what do you think of the marine shipping industry? Yeah, Zim's real popular, right? It's okay, it's only a 15. Let's see. Stock come up at all? It's still back to its IPO price. It had that huge surge. That was back in 2022, 3 years ago. And yeah, it really hasn't come up that much, which is kind of surprising, right? A high dividend. S- 75%. So they paid two consecutive dividends over $3, 365 at the end of 2024 and 317 the first quarter of 2025. See, does anybody own Zim? Did you actually get this much dividends? It was $7 in dividends the past 6 months. $7 of dividends, and the stock is only 15. So half the stock price you got back in dividends. But it's an Israeli company, so you do get hit with a tax. So I have a feeling like 30% of that dividend was held by the company, maybe even more. But let's see if there's any insider trading activity. I doubt it, because it's non-US company. So 25%. Okay, so but still set. That's 33% of your value right there. Let's see the growth rate. So lots of free cash flow in 2024, 3.5 billion, but it's projected to decline a lot. But even if it declines to 1.6, that's still enough to pay a pretty big dividend. It's shipping rates. Where are shipping rates going to go? Are tariffs going to affect rates? They probably will. So I guess demand will lessen. Supply won't be affected too much, but demand will lessen. So maybe rates will come down. But who really knows this stuff? It's all kind of just guesswork. The dividends in the shipping sector seems to be inconsistent. Same thing happened to me with HAFN. Went from 28% yield to 3%. Yeah, that's what happens. They pay a percent of their like they give like half their free cash flow back to the investors, or whatever percent. So if they have a good quarter, you get a huge dividend. But if they have a bad quarter, you get little or no dividend. So HAFN, you can see they paid a big dividend in December 2024, 38 cents, and they cut it to 3 cents. I wonder why they cut it so much. It's just free cash flow. I mean, I'm sure the stock came down too, but the stock was almost $9 in mid 2024. It's a weird looking line right there, right? It fell to, now it's trading a little over $4. It's kind of risky stuff to invest in the shipping industry. I probably wouldn't invest unless you're looking maybe for like a short-term trade, maybe you can like get in like at $5 out at $7, something like that. But it's yeah, I mean, most of the time it's hard to make money. I mean, with Zim you could have made a lot of money. The stock went parabolic the first 2 years. It was paying like a 100% dividend, nearly for a year, 100% dividend. AVR is like 5 something, cutting my losses, to be honest. Your average price, is that what you mean? $5? It's not a bad cost basis, because it was close to 9. But I can't blame you, because if it comes down to like $3, you'll be pissed you didn't sell. But yeah, I don't see that much upside. I see more likely to trade sideways for a long time. Maybe some jumps here and there, but I could see it not moving much. But yeah, it's a tough industry to make a profit. I just try to stick with really good companies, so I don't have to like worry about timing it. I just try to find good companies and just stick with them, whether it goes up or down. Just ride it out. $28 yield to compensate for my risk, but without it, I don't think it's worth it. Yeah, you need really a really good yield to take on a risk, some of these stocks. But when people invest in these stocks, it's after the fact. Like you'll hear other people say, I got a 30% dividend from this stock, or whatever the percent is. So people invest in it thinking they'll get 30%, but they don't get it, because then the stock comes down like 50%, or they cut their dividend. Yeah. Healthpeak. It's so weird that they have Physicians Realty Trust. They have 2 tickers with the 2 stocks with the same ticker. So the yield, yeah, 6%. Well, it's a REIT, right? So REITs tend to pay high dividends. And the stock is pretty steady. I mean, since 2004, it's pretty much traded in a pretty good range. The highest was 2013 at 55. But it hasn't really come down to below its 2000 levels. But that's what you get when you invest in a REIT. You get dividends. So the stock generally trades, for the most part, sideways. Yeah, Airbus is a good one. Yeah, if you want to go against Boeing, Airbus is a good option, because airplane manufacturers are a vital part of the world ever since airplanes were created. So it's either Boeing or Airbus. There's too much reliance on air travel. So that's trading on an all-time high. They get up to 150 in January 2020. And you probably get a pretty good dividend for this stock. Maybe not a good dividend. They don't pay. Oh, they cut their dividend? Is that right? Airbus cut their dividend? Okay, well, it's over an hour. Well, yeah, thanks for joining. I had a long day. I just wanted to socialize a little bit. We're all stuck in our boring jobs. Probably miserable. Most of us are miserable, and just good to kind of decompress a little bit. Okay, so I'll talk to you later, probably this weekend. Okay, thanks a lot. See ya.